This week started strongly for gold, which rallied after Federal Reserve Chairman Ben Bernanke said continued accommodative policies are needed to support the US labour market. However, gold could not hold on to the gains and ended the week more or less where it started. Friday's PM fix was $1,662.50, a very slight dip on the week before. Silver had a similar week, giving up early gains before staging a minor rally towards the end of the week. Friday's silver fix was $32.43 an ounce, a 2.8% weekly gain. In other news, the physical bullion markets remained quiet, with Indian gold jewellery dealers on strike for a second week. Gold jewellers are unhappy at the government's decision to double import duties on gold for the second time this year, as well as their move to put a 1% tax on some jewellery sales. India's government this week said it will review the 1% tax, but has no intention of reversing the duty hike. Based on London fixed prices, gold in dollars set a new end-of-quarter all-time high this week, as indeed did gold in sterling and euros. If you recall, despite setting a daily all-time record in the third quarter of last year, gold fell sharply in September, with the final London gold fix of that month being $1,620. Before we get too excited, it is worth pointing out that gold continued to set end-of-quarter records in June and September of 1980, although with hindsight we know that the bull market had already peaked in January. We should also note that most of the net gains in Q1 2012 came in the first 3 weeks of January. Indeed, spot market gold prices have now posted monthly losses 2 months in a row. Most of the gains that followed the Fed announcement on the 25th of January have now been reversed. That day, you may recall, saw Fed policymakers forecast near-zero interest rates until at least late 2014. An improving US economic picture has since cast doubt on those projections. It is too early to tell whether this quarter was just another consolidation phase or whether we are seeing the beginning of the end for this bull market. Next week sees the release of US non-farm payroll data on Friday. This should give a clue as to how robust the US recovery is, and therefore how accommodative Fed policy is likely to be. London's bullion market will be closed for Good Friday and Easter Monday. 24-hour gold and silver trading will continue on BullionVault. To keep up to date with the latest developments in gold and silver, as well as the wider markets, visit goldnews.bullionvault.com.